how far have we fallen in Ethereum? Was the recent crash anything that was historically out of the ordinary? What we see over here is Ethereum's long-term chart since August of 2017. So we've got parts of the bull run in 17, then we've got our crypto winter in 2018, where we went down by more than 90%, and then the 2020-2021 rally with the recent crash that brought us down from the top to the current price by roughly 75%. Now there are two indicators over here. The very first one is the blue line drawn within the top chart. This is a moving average, and to be more specific, it's the simple moving average with a tick size of 90 on the daily time frame. So this is the 90-day simple moving average. And with that moving average, we see the lower chart over here. Let me actually get this a bit more visible. This lower chart is the moving average extension. So the horizontal red line that we see over here is the zero line. This is when the price crossed the moving average, right? Here, look, for example, on the 21st of July, the price crossed the moving average. We are now crossing the red horizontal line, the zero line. And the y-axis here is the extent to how much we went above or below that moving average. So when we look here in January of 2021, we went above 1, right? So we went above 1 for this moving average extension, meaning the price at the time was more than double what the value of the moving average was. Now, why is this extension useful? Because it gives us some kind of a range, right? If we are really shooting up quickly or if we're really crashing quickly, we might get an idea of when we could potentially turn around. So let's move around this red line here and let's maybe get to the bottom. What we can see is that Ethereum has never crashed that quickly before. So the red line now is at minus 55. So a 55% lower value in the price compared to the moving average. And it's surprising we crashed that quickly because when we look at these peaks here, right, they rather tend to decline over time. Or in other words, the volatility tends to decline. This is rather going down to a certain degree. The rallies, they are less and less pronounced. They are slower and slower. We tend to revert quicker to the moving average over time. So we should expect when volatility is going down that also the downside volatility should decrease, right? We should expect that if the rallies aren't that exuberant anymore, that the crashes might also be somewhat muted. But this is not what we're seeing. But we actually see a crash that never happened to that magnitude before, even during 2018. Now, does this mean here, does this very low value or this very high extension from the moving average now mean that we are going up, that we're going to revert again, since we have seen such an extreme outlier? Now, at some point in time, we will obviously go back to the zero line, right? We can't crash forever at this pace. But that doesn't necessarily mean that the price will recover. Let's look at prior low points here. So let's look at the very first low point, the one in April of 2018. We did get a nice rally afterwards, right? We did get our 126 or 130% rally after we hit that low. But we didn't turn around on a macro cycle scale, right? We afterwards still had our massive crash. When we look at the next low, so this was in September of 2018, again, we did see a temporary short-term relief rally, 40%, but then it just continued to crash down. The third time we hit those low levels, this is then where we actually hit the ultimate low of that cycle, right? We then did never come below this price. This was at roughly $85 or so. So when we now quickly zoom forward into the future, we again had our long-term rally. Now we see our first crash. Do I expect that we have to see new all-time highs from here? Nobody knows for sure. But what we can say from the past is that all of these low points tend to indicate are medium-term rallies that can be 30, 40, 50%, even above 100%. If you're lucky, we actually do turn around. But especially after we have expanded for such an extended period of time, there is obviously also more room to fall. Short term, however, right, in like the first 1, 2, 3, 4, 5 weeks, I think it's not entirely unreasonable to assume that we could see a relief rally, right? So if we just overlay this again, this is very much possible, which would then be in line to even go above the moving average, very likely. Now, this is the 90-day simple moving average. We can look at something very similar for the 45-day, so a bit more short term. Let's update the charts. So this is now the 45-day. It is closer to the price, right? Let's compare those two moving averages that we can see the difference. The 90-day is further away from the price, right? It reacts slower. We average out more data from the past, so it's less reactive to the price. Once we go shorter on the duration, we tend to cross these moving averages more often. Now let's again look at the low points over here. This looks slightly different, right? What we can see over here is that actually the Corona crash tended to be a bit more brutal on the very short time frame, right? We did go lower during the Corona crash, but we have seen similar kinds of bottoms to the recent bottom in the 2018 crypto winter. What I also find interesting when looking at this is that during a bull market, we tend to not crash down very much, right? See how most of the time we are above the moving average. If we are below, we only go very slightly below this. Only when we really extend relatively far from the moving average, that's when we have an extended bear market. And this is now pretty much the first time again, right? Where we are so far extended. So this could be a sign for a continued bear. Now that being said, right, a relief rally is not unlikely. That's also what happened here for the 45-day. We're pretty much measuring here the exact same rallies. The extension from the 45-day and the 90-day, they tend to happen pretty much at the same times. Over here, the low on the 6th of December 2018 was also a relatively low price. We did go temporarily a bit lower, right? So even though we hit a low on the extension, doesn't have to mean that we hit a low in the price. We then afterwards went down another 10% or so. But it does mean that over the short term, we are very depressed, that probably most liquidations have already appeared, that most of the selling by the bears has already been executed. If we now look at the Corona crash, of course, we then afterwards saw a whole new turnaround. The low we saw recently, it appeared on the 18th of June, and it coincided also with the price low, right? So the most extension in a negative way we got from the moving average was also the lowest point versus the moving average. This is no science, right? This is just TA, but still it gives us hints of where bearishness might be at its maximum and where we might consider potentially a contrarian bet. How am I personally reacting to this? I'm personally not really an Ethereum bull, to be honest. I think the problem Ethereum has with its technical execution, the over-promising, under-delivering, the competition of other smart contract platforms, and also the recent appreciation of Bitcoin versus Ethereum, it all tends to point towards Bitcoin being the better asset in a bear market. The upside potential for Ethereum is limited. The downside is definitely there. There are risks. The merge hasn't yet happened. Gas fees might not decrease with the change of proof of work to proof of stake. So that's all fundamental. That's not TA. From a TA perspective, though, a short-term relief rally is not completely unlikely, right? It is what happened in the past when we had been that extended from the moving average. Don't forget to subscribe in case you enjoyed this video, and a like would be appreciated as well. Feel free to also check out the premium membership. That's to be found at thebitcoinstrategy.com. More information is in this video over here. Hope to see you in that video, and thanks for watching this one. Bye bye.